Hey Registrar, this is Ryan with TrendLizard.com. Hope you're having a wonderful day. Thanks for the email. I'm going to take a look at those three tickers that you sent me, BHP Group Limited, Rio Tinto, and Fortescue Metals, three that we've taken a look at before. We're going to provide updated analysis for you, starting from the beginning on each one of them. BHP is up first, incepted back in 1992, chopped around quite a bit. In 1999, it began a large five-wave advance, a first, a second, a third, a fourth, and a fifth wave into the 2011 high, at which point it gave us a very large three-wave counter-trend pullback, which has since been retraced off that 2016 low. It gave us a nice five-wave advance, pulled back with the entire market in early 2020, and has now recovered, moved to a new 2020 high, and is testing that 2011 high again right now, right at its long-term high. It continues to look bullish. I'm going to drive in on it and take a closer look to show you why that is. So here's that advance off the 2016 high. Let me zoom back out. That's just this advance that's emerged after the large long-term counter-trend pullback that played out. As indicated last time, it's given us a nice five-wave advance into the 2019 high, and then a counter-trend three-wave pullback into the 2020 low. Since then, along with the overall market, it's been in a very large, strong recovery move that does appear to be nearing an end to this installment of it. This appears to be the first wave of a larger advance. As shown on the longer term chart, it is now testing its long-term high, so it might find some resistance here. So it kind of syncs up possibly as a spot where a high could occur and give us a larger counter-trend pullback. Let's go ahead and zoom in and look at this action here. Overall, the important thing to take away is it does continue to look bullish, but we need to be on our toes on the shorter-term time frames. I'll show you why. Here's the advance off of March's low. Again, this is the same labeling we used last time I looked at it for you. It's given us a first, a second, a third, a larger fourth wave pullback. And I can't recall exactly when I looked at this before. I think August maybe. It did complete that pullback we were looking for, kicked it into gear in late October, and has just blown up to the upside since then and moved to new highs. Clearly still in the advance, as you can tell here. It does appear to be in the fifth wave of this five-wave advance. We know what happens when five-wave advances complete. They get corrected. So here's what we're looking at. I think the upleg that began in late October is not over. It has to be expected to continue higher from here. It should become a five-wave move before it's completed. It appears to be in the third wave of that five-wave advance off of October's low right now. So we do expect it to continue higher. The key level to keep an eye on is 53. A move below that at any point would be a clear indication that the upleg off March's low has completed and is now undergoing correction. Again, I expect it to head higher before a larger correction completes, and the most important thing is to be looking for the completion of a five-wave move off that late October low. Once you see a general five-wave move, and then you start to see any more notable weakness, that wouldn't be a bad spot to take profits. I mean, it depends on your time frame. If you're a long-term trader, you can sit through a larger counter-trend pullback that corrects this entire advance. Such a pullback would point down to 42 to 50, somewhere in this range. That's where we would expect the correction to find support and then resume the uptrend. If you're playing on a shorter-term time frame, I would exit once you see a completion of a five-wave advance off of October's low. And then get out of the way, wait for that counter-trend pullback, and then buy in after that counter-trend pullback completes. Obviously something I can help you with as we go. But for now, you have to be bullish against 53. Expect a larger advance off of the late October low, and once you see the completion of a five-wave move, you need to be aware that a much larger pullback could emerge to correct this advance off of March's low. So that's how I would play BHP. Let's go ahead and change direction here and look at Rio Tinto, another one we looked at for you previously. Let's do it again. It started back in 1996, gave us a large five-wave advance, hit its head, and then was crushed in 2008, put in a low from there, and has been on the recovery ever since, and is now, again, flirting with that high that was recorded back in 2008. So we looked at this debate last time. There's two ways to look at what is happening here. Let's look at them both. One possibility, what we know for sure, first off, is that the pullback in 2008, despite its size, it's a counter-trend move. It has to be. It's been nearly completely retraced by the recovery effort that's played out since the 2008 low. But it's possible that that counter trend pullback is not over, and that's what this Elliott Wave labeling suggests, that you had an A wave down, that this is one large 3-wave B wave, and once it completes, a much larger C wave pullback would take hold and drive you all the way back down to that 2008 low. I don't know why that would happen. Seems extreme, but it's a possibility based on the possible outcomes according to the Elliott Wave theory. Let's take a look at the other possibility. The other possibility is that the pullback completed here, and the advance that's emerged since is the resumption of the uptrend. I kind of messed up my charts here. That's what this would look like. This would be that counter trend pullback, and then you have a start of a new uptrend, basically a first wave up here, a large, deep second wave pullback, and since then has been in a third wave advance. So that's the other possibility. It's really hard to say at this point which is the case. What we knew last time and what we know now is that currently it's still bullish. So let's, and that's the important thing, to continue to expect higher prices until something indicates otherwise. So let's go ahead and zoom in on this advance off the 2016 low. This is it. As discussed last time, it appears to be a trendy 5-wave move that is in its later stages. We had a first, a second wave, a big extended third wave advance, a very large fourth wave pullback, and since the 2020 low, we've been in a fifth wave advance to the upside. The thing that has to catch our attention here is that it does look like we're in the final leg of this advance, and it also looks like the 2020 advance is nearing the end of its 5-wave pattern. So it looks like it is driving closer to a more important high, and we need to be aware of it, and we need to be ready to take action when there's an indication that these up legs are completing. So let's go ahead and zoom in one more time. We're going to take a look at the advance off the 2020 low. Here's that 5-wave advance that we discussed. You can see it subdivides very nicely. At first, a second, a nice 5-wave advance for wave 3, a 3-wave pullback for wave 4, and now we're in that 5th wave advance off of October's low. And this is a similar pattern that we're seeing in several places across the market. The potential that this advance that's emerged in November to be the final leg of the advance off of March's low. So we need to be on guard for a more important high in the near future, as is the up leg off of October's low does not appear complete. It appears to have given us a first, a second, and is in the third wave of that advance, and should continue higher before it is done. Kind of like the previous one, once you see a 5-wave form off of October's low, and then you start seeing some weakness, you need to be on guard. And if you're a shorter term trader, that would be your time to take profits, get out of the way, and wait for a larger counter trend pullback. A larger counter trend pullback would point Rio down to this area from here to correct the up leg off of March's low. So that's what you would be looking for once you get a completed 5-wave advance off of October's low. A move below 65 at any point, whether it's now or at any later time, would be an indication that this up leg is completed and that we are, in fact, getting that larger counter trend pullback, which points down to about 49 to about 58. So that's what you would be looking for once this up leg is completed and once you start getting that correction. If we take a step back out again, if I can find it here, the concern is that if this is true, if this is one large counter trend pullback that's not complete off the 2008 high, the pending high is going to be the end to this B wave recovery, and that's when you would get a very crushing C wave decline. It doesn't seem like that's going to happen. I think that's a less likely scenario. It seems like more likely that this guy will continue higher off the 2009 low. But even still, it's a reason to respect it once we have indications that the 2020 up leg is completed. You'd have to respect the possibility of that much larger pullback, and that's why, in my mind, once this up leg completes, it's not a bad point to take profits and step aside just to see what happens next. Let price develop a little bit, see what's coming next. Again, the completion of a 5-wave advance off of October's low or a move below 65 at any point tells you that a larger pullback is coming, and in my mind, that is when you want to turn cautious, take profits, and get out of the way, allow for a larger pullback to play out, and then you start getting more information about the longer term time frame where things might head from there. So there is Rio. Let's go ahead and take a look at Fortescue Metals for you. Another one we've looked at. We were bullish on this one last time, It continues to look bullish overall. It was incepted back in 2009. After a pretty sharp start to its lifespan, it embarked on a very large counter-trend three-wave pullback, got below $2, since then put in a low in late 2016, and has been very bullish since then. Gave us a very clear, trendy five-wave advance into the 2017 high, a three-wave pullback into the 2018 low, and since then has been in a large third-wave advance since then that is still continuing. Had a great week this week, gained 14%, and so on and so forth. So let's go ahead and zoom in and take a closer look at some of the near-term details here. This is the advance off the 2018 low that's emerged. If I step back out, that's the low that recorded here, a fairly big low after a 2-year pullback. So here's what's happened since then. You had another nice five-wave advance for wave 1, a second wave pullback, a third wave advance that we believe ended in, let's see, late September of this year, a fourth wave pullback, and then has kicked off to the upside again. So it appears that we could be again nearing a high to the up leg that started in 2018. Higher prices are indicated for now, just like the other guys, but it does look like it's in a terminal wave. Obviously, you want to let the move play out. You want to let it grow as big as it's going to get. But once you start seeing signs of a reversal, some type of weakness after the completion of trendy upside moves, you have to be careful. Because once this five-wave move does complete, the potential for a counter-trend pullback that moves down into this yellow area will be possible. If we take a step back, once this leg completes, basically this large third wave advance, we'd be getting a fourth wave pullback. The only measure that we can really compare this fourth wave pullback to is the second wave pullback that happened in 2017, 2018. That was approximately a 2-year move. So once you get a completed third wave advance to the upside here, you're going to get another pullback that should last several months, potentially up to 2 years. So that would probably be worth stepping aside for when the time comes. So that is why once we complete this five-wave advance, it's time to become more cautious and be aware of the potential for a larger fourth wave pullback after this third wave advance completes. Let's zoom in and just take a look at that more approximate action here. This is what's happened off of March's low. I looked at it with a microscope just to show you why we've labeled it how we have. Every single up leg, the first, the third, and the fifth wave take nice five-wave forms internally, which gives us confidence in this labeling. We had a larger counter-trend pullback, clearly a counter-trend move, appeared to truncate at November's low, kind of a funky, ugly low. We're used to that. We're seeing a lot of these type of random, ambiguous ends to counter-trend pullbacks in 2020. That is not the normal, but we've adapted to it, and we're not surprised when it happens. But since mid-November, it's kicked off to new highs, a very strong move, and is continuing from there. So I think it's going to continue. I think so far this fifth wave is too small to be over, but we need to be on guard at all times from here because this does look like a terminal wave. You can remain bullish as long as Fortescue is trading above 26.50. A move below this level at any point opens up the possibility that a major high is in, and again, that could point all the way down to this yellow support area as this entire multi-month advance gets corrected. So remain bullish against 26.50. Expect higher prices. The second you start seeing more notable weakness, a change in market behavior, be aware that it could be a more important high, and that would be confirmed with a move below 26.50. So, Registrar, I hope that's helpful, man. We do this every day, as you know, at TrendLizard.com. For anybody else who's watching this video that wants us to take a look at any tickers for them, come visit us, sign up at TrendLizard.com for our pro-level service, and I'd be more than happy to take a look at some stocks for you as well. Have a great rest of your weekend, everybody. Take care. Bye now.